Okay, so I decided to do my presentation. I pray I do this the right way, but I decided to do my presentation on forex, the foreign exchange market. It's something that I actually actively trade in myself. I'm a uh, been day trading for about a year and a half now, coming up on 2 years, and I just wanted to kind of display some quick information about it. So a lot of people ask what is forex. Forex is just currency trading. The foreign exchange market, also known as forex or the FX market, traders consist of banks, businesses, governments, investors, and retail traders like myself who speculate on different currencies. It's a decentralized global market where all the world's currencies are traded. Forex messing up already. Forex is the world's most traded market with turnover of $6 trillion per day. These are the hours of the forex market. You got about 4 sessions: Asian, London, and Tokyo. Asian, Tokyo, London, and New York session. 24 hours a day, 5 days a week is how the market operates. The best times to trade are going to be London and New York session. That's when you have the most volatility within the market. Forex trading is the speculation on the price of one currency against another, pretty much. For example, if you think the euro is going to rise against the US dollar, you can buy the euro USD currency pair low and then hopefully sell it at a higher price to make a profit. Of course, if you buy the euro against the dollar, your euro USD, and the US dollar strengthens, you will then be in a losing position. So that's pretty much how it goes. You kind of pretty much predict whether the market is going to go up or down. These are the currencies and the symbols. I did not list it, but major pairs will be any pair paired with the US dollar, USD, and any pair not paired against the US dollar is considered a cross pair. So these are all the different countries and the symbols and the currencies. Currency pair, so Euro USD, they call it fiber. The yen, the dollar yen, GBP USD, GU. We all have our different names for it, things like that. But these are usually the nicknames you'll hear about for those pairs. The exchange rate of two currencies is quoted in a pair, such as the Euro EUR USD or the USD JPY. The reason for this is because in any foreign exchange transaction, you are simultaneously buying one currency and selling the other at the same time. So the base currency is always on the left and the quote currency is always on the right. If you buy the Euro USD and the Euro strengthened against the dollar, you would then be in a profitable trade. The price quoted against any pair talks about base currency. Chart goes up, so is the base currency. So that's kind of how that works. The chart goes down, so is the base currency, as you can see. Leverage. So the beautiful thing about trading is the leverage. You can literally take a very small account and grow it to a very large size in a short or long period of time, depending on your skills. And you pretty much depending on your skill set. But as far as the leverage, leverage is the ability to gear your account into a position greater than your total account margin. For instance, if a trader has $1,000 of margin in his account and he opens, I want to finish that. I do want to finish that part. If a trader has $1,000 of margin in his account and he opens a $100,000 position, he leverages his account by 100 times, or 100 to 1. If he opens a $200,000 position with $1,000 of margin in his account, his leverage is 200 times or 200 to 1, which I would not recommend doing such a dramatic risk trade. That's why risk management is important, but that's the possibilities you have with this platform, well, this skill set. The exchange rate, the value of one currency expressed in terms of another, pretty much USD, Euro USD, this is what makes the pair up. Pips and big figures. The market is measured in pips. So the Forex market is actually measured in pips. And depending on your lot size, that's how you kind of determine how much money you make. So let's say you're going for 10 pips, $1 per pip. If you win that trade, you'll make $10. Ask, rate, and bid price. Ask and bid price. I don't really pay too much attention to these. This is more so dealing with whatever broker you're with. So it's kind of some helpful information, but it's not necessarily needed in order to be profitable at trading. And pretty much the two types of trades you either have a buy or a sell, no in between. Buying, going long, those are the different terms. Bullish market, pretty much you're looking for a buy opportunity. You're buying at a low point within the market and expecting to make a profit as it goes up. Selling, shorting, bearish market, vice versa from bullish or buying. You're looking to make a sale and you're expecting price to go down and you're expecting to you will make a profit if if the market does begin to fall in the direction you predicted as you took the trade in for the sale. And Forex fight, bullish market versus bearish market. Bulls drive the market up, bears drive the market down. Forex ABCD patterns. Some people use these patterns. I used to use these patterns, but I do not use them any longer. It's just a certain type of style of trading. Everybody has their own strategy or style or way they like to trade. But the ABCD pattern was the very first pattern I was introduced to when I began to trade. Here are the different chart types. You have the line chart, you have the bar chart, and the candlestick chart. I usually use the candlestick chart. It's best for the type of analysis you want to do, because you can learn how to read these different candlesticks and tell what price is going or what price is doing. You can see a lot of momentum and volatility within the candlesticks. That'll help you actually read the price chart to determine what direction the market is going in. And there are three types of market analysis. You got technical analysis, fundamental analysis, and sentiment analysis. And these are, technical analysis. You use these different tools to, be technical about the market and read it in that format, that aspect. Fundamental analysis is more so based on, economic, geopolitical, and things like that. And sentiment analysis is based on speculative sentiment index, Forex order book, Forex trader profit ratio, different tools and things you can find online to give you access to see what the banks are doing, what the banks are trading, things of that nature. So yeah, that's pretty much it.